Over the course of this year, the ICO landscape transformed from wildly unregulated territory to a much tamer, more lawful space. Consumers have developed healthy skepticism, governments have cracked down on illegitimate actors. Additionally, companies within the crypto and blockchain industries have taken steps to self regulate the space. Still, the future of ICO backed companies can be volatile and unpredictable. Companies funded by ICOs are faced with a unique set of challenges. Their structures are often fundamentally different than companies who receive more traditional forms of funding. What's more is that we have reached a point in time when the fruits of the ICO boom have been born. Now, the companies who raised millions have shown their substance or lack thereof to the world. Some have been successful, others have squandered millions through failed attempts to build products. Finance Magnates spoke with Jim Preissler, CEO of Trade.io, about the ways that the ICO space has changed and what makes some ICOs more successful than others. Jim also clarified why Trade.io is working on delisting its tokens from exchanges that aren't the platform's native exchange.
Can you just get started by telling us a little bit about yourself and your professional journey and how you got involved with Trade.io?
Yeah, sure. So I started as a technology research, equity research analyst, and then eventually as a technology investment banker covering fintech, internet companies. I actually raised, in the early stages of the internet days, about $4 or $5 billion for a lot of the big names in the internet sector.
Yeah.
Then I went on, and this is at all bulge bracket firms, and then I went on to start a couple of fintech companies. One was taken public on NASDAQ, and another one was actually sold to a New York stock exchange listed firm. So I've kind of looked at this perspective from traditional investment banking, also from an entrepreneur starting a business, all the way through successful funding and exiting. And then I switched to doing advisory and my own private equity investments. And so I always had an interest in technology, fintech. So when the cryptocurrency boom kind of came along, I understood the implications for what it meant for the whole banking, investment banking, trading industry. How it would not only change the processes but change the models. Because effectively, yes, the whole market's digitized, but it still has a paper-based back end, and how blockchain could remove a lot of that inefficiency and cost out of that infrastructure, and then ultimately create a true democratization of the industry, lower cost, commoditize the industry, change financial models. So I saw that disruptive force there, and that's how I got into trying to move ahead with Trade.io, which we had the successful ICO. So I'm probably one of the few people in the world that have not only raised money for companies as an advisor, done IPOs, done my own IPOs, done a successful ICO, and then advised other ICOs as well.
Wow.
So I kind of have the full perspective of the industry. And it was very helpful because when we're talking to teams and we're trying to help them, I've been in their shoes, so I know what they're going through. So it's not like, we're talking in a vacuum. We've been there. And I think that's one of the things that really helps our business going forward is we have that perspective and advice of having been there and done that.
Right. So now that you see, you've worked with a lot of companies who have been going through the process of holding an ICO. Can you tell us what are the biggest mistakes that you see those companies making?
Yeah, and that's a very long list, unfortunately. But the reality is you're trying to compress a fundraising, a public launch, building a company, and all of this all into one or 2 month period. So it's incredibly stressful, time consuming. So you really have to go into it with a lot of planning. And if there's any areas where the wheels can come off, they will come off. So the more prepared you're going into it, the better off you're going to be. And I think I see every team, we want to go fast, we want to rush it. Well, inevitably it's going to cause a very big problem in doing so. You really have to kind of step back and plan things properly. And it's not only the process, but it's things that get neglected, like security. And when I mean security, not only just for the website, but also management's personal security. Hardening their personal cell phones, hardening the websites, things like that, which often get overlooked and become access points for potential problems. So So you really can't cut corners. You really have to plan things out well. So I think that's kind of the first thing. Is everybody really wants to rush the process. They see it as quick, easy cash, and it really isn't. It's hard work. It takes a lot of planning, and you really have to kind of step back and think this whole process through rather than just rushing headfirst into it.
Mm-hmm. And I mean, so kind of from your perspective, then, do you see, that more and more companies who are choosing to hold ICOs, like, has the kind of culture around ICOs changed at all since you've been in this space, and in what ways?
Well, yeah, I mean, I think the easy days of the ICOs have been long over. Now, you're seeing most ICOs, they either raise a decent amount of money or they raise nothing. There's almost like no middle ground anymore.
Right.
And that's really a differentiation between two guys in a white paper and a well-planned ICO, right? You'll either have to do one or the other. And unless you have an incredible idea, the two guys in the white paper days, I think, are pretty much behind us. Mm-hmm. So we're seeing more established companies that are moving into an ICO or well-planned startups with good teams moving an ICO. I think those are the ones that are going to be successful going forward. I think kind of the heyday of it is behind us.
Right, and so kind of how is that cultural change sort of reflected in cryptocurrency market caps, or what kind of correlation do you see there?
Well, after you've done the ICO, then you have to build a company and a product, which is the next big hurdle where you see a tremendous amount of failure, not surprisingly. And a lot of this has to do with you have teams that have never done this before, right? So how do you expect, two guys with only a couple of years of corporate experience to build a business, build a team, build a company, build a product? It's not easy. And in many cases, they don't have the support networks that you traditionally have in venture capital, like the VCs, which, they do add value. They do add advice, support, networks, a person to easily turn to for a question. So many ICOs are trying to do this without that whole support network behind them, which is making the problem even harder to achieve. Mm-hmm. So I think the next stage is, okay, you've successfully done your ICO. How do we make it into a successful, long-term, survivable entity? And I think that's kind of the next wave of failure. And we're starting to see, like, the 2017 and early 2018 deals. A lot of them are not really turning into anything. So they raised money, and either the money is kind of gone or it was squandered. And you're only going to see, a small percentage of them actually successfully deliver a product. And what I kind of see as the commonality on that, the ones that successfully do it, in many cases, it's teams where the management team have done startups before, they've been through a venture capital process before, or they have enough corporate background and experience to kind of navigate the tougher problems. Mm-hmm. That's really the next step. And so, when all is said and done, when you take all these challenges, the reality is you're going to see 80, 90, maybe 95% of all ICOs fail. Which is not that dissimilar from the VC world. I mean, you see most startups fail as well. So I think we're going to see similar numbers that may be more skewed to a higher failure rate for ICOs.
I see. So let's talk a little bit more about Trade.io. Can you just give us kind of the TLDR? What is Trade.io?
Right. So we're building a multi-asset exchange. That's the long-term vision in a regulated environment. And we also have the partner advisory consulting business that goes along with it. So, the long-term plan is when the regulations are there, everybody sees utility ICOs, but the long-term marketplace, it's very clear, obviously, and why we got into it in the first place, is that the market's going to migrate away from traditional VC and IPOs and move towards a more efficient model. So you're going to see digital IPOs, whether you want to call them ICOs or security token, whatever it is, that the name is irrelevant, but you're going to see equities listed, debt listed, assets listed using blockchain technology. And that's what the part we're more interested in once we're building towards long term. So our advisory business is well underway. We have a very robust pipeline of companies we're working with. Our exchange launched roughly about a month ago. We're still building it out very actively. It just launched with the crypto-to-crypto piece. Later on, we're going to add fiat, and then over time, we're going to add FX, multi-asset, and then when the regulations are cleared, ultimately securities. So that's the long-term vision for the two pieces.
Okay. And who are the kind of like intended users of this? Is this something that's more geared toward institutional customers or retail investors?
It's retail as well as institutional, so it's no different than any large investment bank. So we're gearing towards both. And we have, for example, for institutional, we have a separate OTC business that services them.
Okay. What are fees like on the platform?
Sorry, fees? Is that what you said?
Yes.
Yeah, so we're on the lower end of the scale as far as fees, and we're toying with different models going forward depending on the type of clientele. So we're at the lower end of the range for fees.
Okay. Can you give me some specifics on that, or is it kind of still being decided?
Yeah, I mean, it's longer term is still being decided. So we're doing a 0.1 for taker. Actually, right now we're still kind of in the free stage.
Oh,
so,
okay.
But I think longer term it might be 0.1 for taker. The other thing that we've done, which is very different, is that basically we have our TO token holders, and one of the utilities of a TO token is you could participate in our shared liquidity pool, which effectively makes you a liquidity provider to the overall exchange. And by doing so, about half of of what the overall exchange makes will be given back to these token holders who are participating in the liquidity pool. So that's the other innovative feature that, in concept, is you could trade with somebody like Schwab, or you could trade with Schwab and get half Schwab's profits. So we're kind of changing the model of what it means to be a user of exchange. That you can be a trader, you can also be a participant in the exchange itself and receive money because of that.
Mm-hmm. Can you tell me a little bit about the process for listing an asset on Trade.io?
Yeah, so we have different models. We just started listing our first tokens over the last couple of weeks. So we're adding several a week as our goal. We're starting with a lot of the ERC-20s, but ultimately we're going to be adding different blockchains as well. So primary focus is on adding the tokens of big projects as well as clients. So that's the primary initial priority of adding tokens. But like anything else, you can apply to be listed on our exchange as well.
Okay, and if I am a company that's applying to have my token listed, what kinds of requirements do I need to meet in order for that to happen?
Yeah, I mean, so we do KYC due diligence on the teams. We're looking for a security audit of the tokens themselves. In some cases, we require some sort of escrow agreement, particularly if it's a new blockchain that hasn't been fully vetted yet, so that if there's any security issues with either the blockchain or the smart contract, there's some sort of backup plan in place. So it's a little bit different in different cases, but we're trying to do whatever makes sense to best protect the users of the exchange itself.
I see. And you mentioned briefly the TIO token and one of its utilitarian purposes. Can you expand a little bit about the TIO token? What other kinds of things can it be used for?
Yeah, so people that are paying with the token receive discounts. So it has a kind of a coupon discount feature to it. If you're trading with it, you can get better liquidity on the exchange, things like that. So we're adding features over time. So for example, some of our consulting clients will receive a 15% discount if they pay with that token versus paying with Bitcoin or Ethereum or something else.
Okay.
Where if you're trading on the exchange, you can receive discounts as well.
I see. And Trade.io recently announced that it was successfully unlisted from OKX. Is that correct?
Mm-hmm. It did. So what we're trying to do is, we see what's going on across, and I'm not particularly, singling out OKX. I'm just talking in general. We're seeing like wash trading, strange trading patterns. So in order to kind of protect our token holders and give them a lower cost alternative, we're trying to move the bulk of the trading onto our own exchange. And there's also a lot of regulatory reasons to do that as well. Mm-hmm. So that's what we're trying to do is concentrate everything on our exchange.
Okay, so the reason for wanting to delist from OKX was because of this these wash trading and trading bots or whatever.
Yeah, and there are also a lot of the exchanges, they're coming back with increasing demands for higher fees and a lot of other stuff.
Was that the case with OKX?
Yeah, so like I said, we're trying to basically just do the right thing for our overall community.
Okay.
That's the goal there.
So is that also why it says on the howsitcoming.trade.io page that the TIO token is being delisted from a few other exchanges, hit BTC, Gate.io, and Tidex and IDEX?
Correct. So
Okay.
we're trying to keep things concentrated on our exchange, where we can control the outcome and we know everything is on the up and up.
Okay.
That's basically the goal.
Right. And are you? How do you think that having the majority of the token trading on the Trade.io native exchange, how will that affect the token value?
Well, I mean, the utility is on our exchange. That makes sense for it to be traded on our exchange. So I don't think it will, adversely affect the value at all. If anything, having it concentrated and all the liquidity in one spot will help, the overall just value of it, utility of it, liquidity of it, and so on. So that's what we're trying to achieve there. And then there's a lot of regulatory advantages. We can control what's going on with the tokens, who's holding them, how they're being utilized, and all of that, because it's directly in our purview then.
Right, yeah. And I'm curious, so there's kind of a movement among some of the larger exchanges to open up, either go fully decentralized or to open up, partner exchanges that are decentralized. What do you think about this trend, and are there any plans for Trade.io to sort of explore the decentralized exchange model?
Yeah, I mean, that's a longer term vision. I mean, clearly a lot of these centralized models are not ready for prime time when it comes to the day-to-day user. They're very geared towards the tech-savvy, very crypto-knowledgeable user set. Right. So, we're developing down that path, and that's kind of in the long-term vision to do either a hybrid or a more decentralized version. But there's a lot of work that needs to be done for the industry to get there.
Okay. Can you tell us what's on the roadmap for Trade.io this year?
Yeah, so this year, obviously, it's continue to enhance the exchange, the features, functionality, adding a lot of new tokens, new blockchains, then, exploring adding FX. A little bit longer term will be potentially the multi-assets and things like equities. And then, behind the scenes, a lot's happening on the regulatory front. We're doing a lot of work with FINRA and the SEC in the U.S., different other jurisdictions worldwide. So that's kind of the agenda for the rest of the year and early next year.
Okay. And is Trade.io based in the United States?
I'm in the U.S. We have a bunch of team members in the U.S. I have a registered broker-dealer in the U.S., which we're doing a lot with to expand. So yes, we do have a U.S. presence. We haven't really highlighted it, but we have it.
Okay. Where's the company itself actually based?
So we have offices in Hong Kong, is one of our larger offices. We also have offices in Switzerland, Cyprus. We're building smaller offices in, potentially in Malta, a few other places. And we have smaller offices also in like Singapore and Kuala Lumpur, and some of that's customer service type stuff. So we have a pretty good global footprint at this point.
Right, and is it is incorporated in China or?
Our main corporation's in Switzerland.
In Switzerland, okay. I see. Where do you, in kind of an ideal world, where do you see this platform in like 5 years?
Yeah, I mean, the long-term vision is for the everyday user to have a very easy to understand and use interface, and crypto will just be integrated with any other asset. So, it will be kind of seamless. So it won't be anything particularly special. So that's the long-term vision. So you'll just be trading another asset that, the average user may not even know that it's on the blockchain, right? It's like, does the average person actually know how Apple stock is traded? They probably don't. They have no idea, right? They're buying Apple stock, right? That's the long-term vision. So, right now it's very early adopter focused, but longer term that's going to change. And also the audience is going to change. It's going to be more of the audience that is typically buying equities. If you look at the demographics right now, it's heavily male, it's heavily geared towards the younger end of the spectrum. But if we actually look where the wealth is around the world, it's a little bit of a different demographic. So yes, you have to kind of accommodate both for the foreseeable future, but the long-term vision is, it's the person who is buying Bitcoin, and they may not necessarily care, or Ethereum, they may not necessarily care where or how it's listed.
Right, and this is very interesting what you said about this demographic thing. So is Trade.io making any sort of concerted efforts to reach outside of the typical, male 18 to 50?
Yeah, I think that's why we're heading down the regulatory path,
Okay.
because that's what's important. So, anyway, I got to wrap it up if that's okay.
Yeah, absolutely.
But yeah, I think that is the kind of long-term vision of where we see the industry going, and why we're kind of embracing regulations and trying to kind of take the cleaner approach to the industry, because that's where we see. I mean, we're just looking at the demographics, and you can pull up a million different reports from different brokerage firms on high net worth individuals and where the wealth is and what people want and what the demographics are. So, I mean, I think that's the kind of the longer term plan there.
Jim, thank you so much for your time.
Awesome. Thank you.